Hey, what's going on, ladies and gentlemen? Camilo here. Hope you're well. Hope you all had a fantastic weekend. So don't forget that the on Wednesday we had the FOMC meeting, which, as you recall last week, this is a very important event that we are all anticipating. Market participants are all anticipating for this event, and if we pair that up to our chart analysis, right? That suggests that we are going to start trading sideways. I mean, tomorrow's Tuesday, so it is likely that we will continue probably lower into the support zone before we potentially start heading on higher. Now, this is still too early to tell. We still have our alternate count, which suggests that perhaps if whatever Powell says on Wednesday surprises and is negative or is too hawkish, right? Then that interpretation could be at play. Now, before we dive into this and review the chart and the wave count here, don't forget to subscribe, give me a thumbs up on this video, and hit that bell icon so you'll be notified when I upload the videos. Also, join Trending Waves. The link to our Discord group is pinned down in the comments section. So the charts are now telling us that it is clear that we are waiting for that event to occur on Wednesday. Okay, now the good thing that we have going on with our preferred count, which suggests that we have our wave 3 coming after Wednesday, is that we're holding some key level supports. Okay, our first level of support that we're holding is the B wave here. Okay, the high of the B wave, which as you can see clearly here, has been tested 1 and 2 times, actually 3 times. Okay, so that's a pretty good sign. We also see price action being held at these levels, at this zone. All right, so I actually like this. All right, and that's indicative of that wave 2 that we look for. So we have the A wave, we have the B wave, and now we have 1, 2, 3, 4, and 5. Perhaps it's just slightly lower coming into tomorrow, and then some sideways price action on Wednesday before or prior to the FOMC meeting. All right, so our targets for this week are going to be to hold support at 466. The bulls got to defend 466. Our alternate or worst case scenario is that we drop down towards the $462 region. Okay, so those are the two areas, or perhaps better said, our range to look for before we continue or consider any trades to the upside. Alternatively, right, our worst case scenario, which is our bearish count, will suggest that on Wednesday, we get surprised, hawkish from Powell, and then we start selling off. So this wave structure or this wave count suggests that when we completed the wave 1 here on November the 22nd, all right, we sold off in wave A. We did 3 waves, A, B, and C, to the B wave here, holding resistance at the 78.6 and the 100% extension. Retracement of wave A, which comes in at 473 and 468. Now you can clearly see that this zone here is our area that we are looking at for either support or resistance. So levels must hold this area here for us to consider the trade to the upside. Otherwise, if we start breaking lower than the wave 2, it is likely. Now, where would the targets for this wave 2 likely be? So if we take an extension from the high wave A to the low to this high here, a 100% extension of this wave A will likely come towards a 447.70 in the SPY. Okay, so this is a zone that I would like to pay attention to, regardless of the fact, I mean, this will be a short-term bearish or pullback, right? Ultimately meeting with some support and further upside in the wave 3. So either scenario, it is likely that we see good opportunity for trading and for us to profit from. All right, so keep those levels in mind. Now over to the Qs. Again, if you guys have any questions, just leave the comments down in the comment section. I'd love to interact with you guys and get back to you. All right, so the Qs is suggesting we're gonna just review the alt count, our preferred count on the Qs, right? So out of November 19th high, we got 3 waves down into wave 2. Again, 50% retracement of what? Of this overall wave 1 advance. So if you're familiar with Elliott wave, all right, a wave 2 pullback after your initial first wave should come down towards the the 38, the 23.6 to 38.2. But a good support is the 50%. Okay, if we get that bounce from the 50% and we sell and we gap up like we just did, and then we retrace, it is likely that we are gonna head on higher. So this count, I am preferring it. Okay, now we see that we're holding support at the 38.2% retracement. Okay, which is the wave C. Now, what could happen here is that we see perhaps tech start rallying while the SPY is still going to make its leg lower. all right, down here. So let's compare these two real quick, our both counts here. So what I am proposing is that we see the SPY pull back ever so slightly towards our support zones, and the Qs at the same time will start leading, okay, and then the SPY will catch up. Okay, that is what I am anticipating. Okay, I am a bull in the market, and that's what it is likely in my scenario that's the case to be. All right, over to the SMH. SMH, you know, is pulling ever so slightly, unless, as I mentioned to you guys in our last video, this is still the wave 4 ongoing. All right, and we will see a further downside. So if this is the A wave, okay, then we take an extension. Measure move will take us down towards the 100% extension. Equality to wave A will be 287. So 287, the range between 290 and 287, it is our likely scenario that SMH will bounce. You know, if we stay above 290.74, then this is the likely scenario that we will bounce. Otherwise, we are going to head on lower. I mean, we see the makings of 5 waves already, right? We got 1, 2, maybe the makings of the 3rd wave already, 4, and then the final 5th. IWM, you know, I like IWM where it's at, but I'm not, I mean, where it was, right? We broke support, and I wanted to see IWM hold this range here, or this price structure, this cluster of pricing. All right, I wanted to see that hold, but unfortunately we broke below it, guys. So what I am leading to believe is that IWM, like the SMH, all right, we are heading lower. So let's take a look at what that wave count looks like here, and let's go over to the, actually here is fine. So I propose that we're still within that wave 4 correction, right? We completed the 3rd wave on March the 13th. We got the first A wave, 3 wave pullback into the wave B, and now we see 1, 2, or the A, B, and C to give us down towards the final 4th wave. All right, so likely that if we take an extension, all right, at 1618, it is likely that that's our next target. At 1618 will take us down to 202. All right, guys, so keep your eyes open for this. Otherwise, if we hold invalidation, if we stay above invalidation, then, you know, the likelihood that this was A, we go down in B, all right, and then C is this massive move that's going to take out this highs, then hey, by all means we welcome it. But we have, you know, about 2.5% left before we can say this count is no longer valid. All right, over to the Dow. The Dow pulled back ever so slightly today. All right, and we are considering this to be the A, B, and C, unless this is the 3rd wave completion here, and the C wave, sorry, in the 4th wave. So this is A, B, and C. Unlikely, because you see we have the wave 2 here being directional. So I'm favoring that this is a sideways correction, all right, the guideline of alternation. So A, B, and then the final C wave before we start heading on higher. So I want to see the DIA hold at least the $355.91 region before we can see any further price action to the upside. Okay, now any of this analysis can change. Wednesday we'll know. All right, guys, so prepare yourselves for that day. If you have ongoing positions, just manage them appropriately. Don't overextend yourself. Please do not do that. It is very difficult to trade any FOMC event. And so, yeah, as always, thank you so much for your time. See you guys tomorrow.